Hi, I'm Michael O'Connell, and this is my friend Gerry Redlinger. Gerry is the proprietor of Launch Services, a business consulting firm in Iowa City here. And I'm going to ask him a couple questions for the Go See It project about his inventory and what inventory he sees with his clients. So my first question for you is, do you at Launch Services use periodic or perpetual inventory?
So Launch Services, we primarily focus on serving our clients' needs in the areas of bookkeeping, accounting, financial projections. I'll put my hat on, my hair's bad. Financial projections and business formation. So we actually don't have any inventory, properly speaking. So
Okay. Now, in terms of like a cost system, do you use FIFO, LIFO, average cost, or do you just not even use any of those?
So we wouldn't use any of those, properly speaking. And our own books are just kept on a cash basis for managerial purposes, in terms of understanding our costs, so that we can assess client profitability across the board. We allocate our costs, based on the labor hours spent per client, and then we take our overhead, so those costs aren't direct labor, and allocate those to the client based on hours. Labor hours, again, is the cost driver that we use to make that allocation. And so we just put that all in the bucket, and it's, maybe it's around, depending on how you count it, $20 to $25 an hour is sort of like the cost, and our standard billing rate's like $50 an hour. So.
Okay. Now, since he doesn't actually have any inventory on book, I'm going to ask him about his clients and see which system he sees more as an accountant. So, do you see periodic inventory more? Do you see perpetual, or do you know why? Either one?
Yeah, that's a good question. Absolutely. So I think perpetual is the way to go if you can swing it, but it requires a level of technology and information systems in place that I think some of our clients don't have. We serve on the smaller end, smaller range of clients, like a local retailer, or we have a client in California that purchases like plush bears from China, and they put your company logo on them, and that kind of thing. So it's like they're smaller businesses. We serve clients in the area of $200,000 a year revenue to let's say $1 million or $2 million. That's kind of the range revenue wise that we serve. So they're on the smaller end. That said, they're more often the kind of client that's going to use some form of hybrid, maybe, or periodic, or perhaps it's a hybrid, but more toward the periodic end of the spectrum.
Okay.
Yeah.
Now, when you see the cost systems, do you see FIFO more, LIFO, or do you see average cost more, or do you not really get into that?
Probably more. I don't think I've ever seen LIFO.
I mean, everything I've ever used is FIFO. I mean, first in, first out just makes sense. So.
Right. I think it's big in the oil industry and things like that.
Yeah.
But
I think nothing like that. It's usually FIFO. Yeah. Okay. And then, do you ever advise your clients just to take an actual physical count of their inventory, if maybe once a month, once every quarter, or something like that? Or do you ever see them doing that? Or
I wish. I don't. I need to be careful what I say here. Yeah. I don't. I don't think I recall personally ever making a particular recommendation in that area.
Yeah. But do you think it's just kind of assume that they do anyways?
Right. Right. So we're looking at the books from the back end and only getting what actually comes through onto that through their bank account. We do them all cash basis, not accrual, and so essentially a little bit of hybrid with receivables and stuff. But so what this means is, we just look at, we just kind of see what is sold, cost of goods sold wise, and then adjust accordingly. Maybe, I think with one client, he'll do a count maybe at the end of the year or something, and then we'll adjust if we need to. So.
All right, cool. Well, I think it's all the questions I have, so I want to thank you for coming out and
absolutely
let me interview. And this is the Go See It project.